a very warm welcome to all of you. And thank you so much for taking out the time and being here for this session, for yourselves, for your learning. And I really hope that Soumya and I can give you enough insights today that will help you to take smart decisions, informed decisions about your real estate investment. Let me quickly introduce myself. My name is Chanda Verma. I am a Senior Vice President and Financial Coach at MFA Capital Private Limited. I have over 20 years of work experience in the financial services industry. I have worked previously with firms such as GE Capital and HSBC Bank. I have done my post graduation in finance and I'm also a certified financial planner. I work very closely with corporate executives, business owners, and doctors, guiding them on financial literacy and goal based investing. And I'm pretty passionate about educating people about financial planning and investment planning. And that we do through podcasts and videos, and we create quite engaging content. I'll also like Soumya to introduce herself. Soumya.
Thank you so much, Chanda. Very good evening and warm welcome to everyone. I'm Soumya Krishnan. I'm a Senior Vice President and Financial Coach with Happiness Factory. So I'm also a certified wealth manager and I've done I'm also a CAIB. I was a banker for about 12 years and I have about 18 years of experience in wealth management. So here at Happiness Factory, I handle many NRI families, doctor families, retirees, and corporate executives. I am also very, very passionate about taking my clients to attain that happy rich status. That is what we strongly believe in, right? So it's just not a rich, it's a happy rich. So most of our clients know what it means to us, and I'm just creating that day in and day out in our client's life. Yeah.
Creating value.
So yeah. So, what is it we are going to discuss today? Chanda has already told you that real estate is decision hold or sell, right? So, this is a very, very important topic on favorite topic, right? Why it's a favorite topic for most of us? Because real estate is a most favorite asset class, right? So, we also be backing up with some of the statistics that why it is favorite. And most of the Indian households, majority of investment lies with real estate, right? So while this is the scenario, and most of us will get confused, sometimes may not be able to take a right decision, right? So in this session, we are trying to give you some insights about how do you take the right decision that suits your financial goals and that suits your life stage and everything. So these are all the objectives that we want to achieve today in today's session. What are all the myths or the perspective around the property which may not be true? Right? And what is the trend of the real estate market overall in the country for the last 15, 20 years? And specifically, what is the property returns trend, broader trend, right? So when we talk about trend, here we are going to talk about taking the average of the major cities of India. And we are also putting the range between this because it's very difficult to accurately find out how you tell the returns of the Nifty or Sensex. So we tried our best to put the data together to give you the right number and understanding the real returns generated from properties, right? So this is an important point that most of us might have not given attention to, right? So the returns that is showing in the newspaper, magazine, or statistics is one, and what is the real return generated after all the expenses, taxes? There are many, many parameters. We are going to break into each one of it and then show you the numbers, right? Then comes to the decision making. Should you sell your property or hold on to it, right? So here we are majorly talking about the property that you have additional or over and above that you hold where you are living in. Right. So we are not talking about the residential property that you are living in. So most of us have extra or additional one property or the property that we have bought first, now moved on to a bigger property or property inherited. It could be one, or for many of us, it is more than one also. So we are mainly talking about the property that you have additionally over and above to your residential property where you are residing. And this is also being held for investment or your rental yield, whatever you may say. So we are talking about that property. Would you be selling or holding? How to take the right decision, right? So also anything that is can be learned, like Chanda has told, that we all are here to learn something today, and that there is no better way to learn other than the case studies. These are real life case studies that we have seen and we have helped our clients. So we are going to talk about that and what is the key takeaways from this session, right? So again, I want to reiterate here, we are not going to talk about any asset class with high regard, or we are not giving regards to any asset class. It's pretty neutral. We are just trying to give the perspective where in most of this information, in most of the places, you may not get it. So it's very neutral. And what is the takeaway from this session? How you can take a decision when it comes to selling or holding on to your additional property. Then finally, we will just quickly talk about MFA and Happiness Factory. And by end of the session, we will also take if you have any questions. Before we dive into the session, I would like to launch a poll. I would request your participation to. I'm not able to see the poll option.
Yeah,
Thank
it's
you.
come.
Thank you. Yeah. Requesting you all to please participate in this. It will really help us understand what level of, I mean, what is a life stage you are in, what is your experience as far as property is concerned, where do you stand, etc. Thank you so much for filling in this. I will give another 30 to 40 seconds and then end the poll. Yeah, thanks for participating in this poll. So most of you here have mentioned that you own additional property, and many of you have mentioned different reasons that you are holding it for rental income, and some are for future appreciation and due to emotional attachment. So there are mixed percentage of answers. Thanks for giving this poll. Now we will move on to the next slide and the session. Yeah, home is where the myth is, right? So there are many myths that we have heard over and above from our clients and also in the market and from our relatives and from our own home, right? So one common thing that everybody talks about is property investment is always safe, right? I can see that, I can touch it, I can live in it. It is always safe. Property kabhi zero nahi hoti. This value can never be zero and it cannot be negative also. This is one myth. They always see that the property value can only appreciate, right? I can touch and feel. This is an emotional value, that this is the only asset that I can touch and feel. The rest are all in papers or in the digital form. I get rental income out of it. That is also something that you realize that you get it month on month to your bank account, which is real, right? Unlike the other assets which gives only capital appreciation. Sometimes some asset gives dividends, but this is real and it is certain, is what many people feel. And this is the asset that I can pass on to my kids, right? So I have many clients saying that I have two additional properties, three additional properties, one for son and two for my daughters, right? So they already split it and keep it. If they have one and then they do not have one more additional, they feel bad that okay, only this goes for my son, and what about my other daughter, right? So for this also they have it in their top of their mind, and then they keep additional properties to pass it on to their kids. And people also keep property for different goals, right? So this particular land or farmland is for my son's higher education. The additional home that I have in my hometown is for my daughter's wedding. So they tag it to the goal and then they hold on to it. So these are all some myths, and we will also see how not all the myths are correct. And we are going to back it up with the data, statistics, and the real life example. And I'm going to talk about the property market growth in India, right? So how in India, the real estate market has grown. Right. So from 99 to 2000, when the economy opened up, that is when the urbanization and the demand had come up. And that point in time, India has seen a very good real estate growth, right? So when I say very good, We can see that it's 7.5 is the average between 2000 to 2010. That's when the realty boom has started, we would say. Right. And after that, 2010, because we all know the reason if we belong to that era, from 2008-9, slowly it dropped because of the subprime crisis and the demand slowed down and per capita income terribly gone down. So because of all these reasons, the demand reduced and the property market fell very steeply between 10 to 16. Right. And it took quite some time to recover. That had happened only after 2016 and 2020. Slowly and steadily, the market has started growing. I'm talking about only the real estate market, the demand, the supply, and the growth year on year, how the sale had gone up. I'm talking about that. Right. Post 2018, there's been a very good recovery with 6%. And after that, COVID hit, and around 2021, there has been a slowdown. To compensate that slowdown in 22-23, it has really picked up. So in the 2 years of growth, which is in the higher side of the single digit, have compensated the last 2 years slowdown and everything. So overall, if you see between these years, the average has been around again 5 to 6%, right? So it is in the single digit, and experts are forecasting 25-26 growth will be around 6 to 7%. While this is the growth trend of real estate or property market growth in India, how has been the returns, right? So this part is something we are all interested in, right? So look at these numbers. We all are talking about property which multiplies in the next I bought a property 10 years before, it is 2 times, right? I bought a property 20 years before, 15 years before I inherited, this is multiplied 4 times. So we always talk about the multiples, right? We don't talk about the CAGR term or XIRR term that I like how we are talking about financial assets or equity, right? So this is the real number. Between 11 to 15, the residential property returns in India were stable. So when we say stable, it is between 4 to 5%, right? And 15 to 20, there's been a growth, but it's not a significant growth. It's 4.5 to 5%, right? 20 to 25, the returns improved. This, as I told you, that 2021 slowdown, and 23-24, the base effect was very less, and then it has gone really up. People had FOMO and then went and bought. Okay, for COVID is over now, I will accumulate some property, and the demand went up, and the property price also have gone up. So that time, that period between 20 to 25, it was 6 to 7% per annum. This is because of the lower interest rate, government support, as I told you, post-COVID demand, right? So overall, if you see between 25 to the last 15 years, it was approximately 5.3%, right? Isn't it surprising? So this has been the trend that we have taken out the data, as we have mentioned, across the city, and then taken the average and presenting this data. This is how the property returns have been in India. So the previous data showed how the market is raised, and this is showing how the property returns has been, right? Now, another question I can hear, what is that you all are talking about? Yeah, this is the returns. We are not holding it for the returns. That is only one aspect. What about rental income, right? I get very good rental income, right? So this good rental income, we will break it into numbers, right? So when they talk about good rental income, they always compare it with the rent that they have paid, or what percentage it is contributing to their monthly expenses and all that, right? So it's never been converted into the real numbers or percentage. Now look at these numbers. We have taken this data for the major cities, Mumbai, Delhi, and Bangalore, and there are also other cities that we have taken which are growing rapidly. Across the cities, the rental yield is between 2 to 4%, right? 2 on the lower side, 4 on the higher side. Right. So now this is also really, really surprising for many people. When you compare this rental income of India's broader or major cities to the major cities of USA and UK, there has been a huge difference, right? So 6 to 8% is the rental yield over there, and here it is 2 to 4%. This is because if you look at the net return, it is even lower because of the additional cost, the vacancy, the maintenance, all that we pay. So we have put in only the gross rental yield, right? So the rental yield is high because of the high property prices and the added cost and everything. So look at this number. I don't want to go city by city. It is just for your understanding. So basically the range is 2 to 4. If you are getting 4% rental income, then that is the best, right? So this is how the trend is of the rental income. So we have seen.
Soumya, what happens is when we look at rental income, we look at the absolute number, right? We take oh, we've got 2 lakh rupee rent, and if I have 2 properties with give me 2 lakh each, 4 lakh, my retirement is sorted. But when we
Exactly.
actually compare it with the value of the property you hold, the cost that you're paid, hopefully that property is not on loan, but if it is on loan, then the additional cost which is there, the yields really can even go negative, not even 2 to 4%, they can go negative. So
Correct.
people never
Absolutely.
calculate rental yields. Thankfully, we'll have some calculations to show them later. But this is
Correct.
very important for people to understand that every time you earn rent, first calculate what your yield is. You're getting 50,000 rupees divided by the cost of property or the market value of the property and figure what your rental yields are.
Very, very well said, Chanda. So they always compare it with their expenses and how much do I need, and I'm getting it. They don't compare it with the price and look at the percentage, right? And yeah, so I just spoke about it in the initial session, right? Why it is a favorite asset class. So here are the numbers. Look at this. 51% of the investments into the assets is real estate, right? So every Indian household's favorite investment is real estate, right? Followed by gold. Like it goes with the same fact that we have mentioned, Chanda, that people love to have the asset which they can touch and
Correct.
feel.
That's it.
Right, so they love those assets and still it is not changed, and put together all the other assets like your, then followed by that bank fixed deposit. This is another favorite product for them, and then traditionally they have been having it, so they have that thing in their mind that it is safe, it is guaranteed, right? Because of these reasons. So as far as real estate is concerned, it is perceived that way, that it is safer and it will not go down. And the bank deposit and all that, it is true that it mentioned that what is the return that they are going to get. And gold is something I don't have to tell you that why Indians love gold,
We love
right? So
gold.
for yeah, you can touch and feel and then keep it, but hardly they have used it for any of the investments, right? So we always say, or the experts are also saying, that your investment should be consumed in your lifetime for different goals or purposes, or to be passed on to the next generation. That's the real wealth or the investments, right? So gold is something that it is, maybe we can do another session about that. I have not seen anybody using it for any of the goals or anything, and other than gifting it for the wedding, right? So real estate being the biggest contributor, that is 51 percentage. That's why we are doing session, and we are going to talk more about the real estate questions that they have, that should I buy or hold, or a lot of things. Now we're coming back to, okay, these are all the trends, right? Now let's come back to the question, why
Come
the session is the
to the
main content of
question.
the session. Yeah, Chanda.
Correct. Let's come to the $1 million question. Should I hold on to the property or should I sell? Like Soumya said, what we are talking about is a situation where you already have a residential property, but you are holding other property, 1, 2, 4, 5. I've seen people holding 10, 15 properties also. You're holding all these other properties. You probably try to monetize them by putting them on rent, but the thought of ever selling them, it troubles you sometimes, but you've not been able to take a decision whether you should hold or you should sell them. So let's try and address this. I think all of you are going to relate to these case studies and examples because all of us have been in this situation. All right. So let's go ahead. So we call it the can't let it go syndrome. So see, there are feelings attached to property. It is a very emotional decision. We all think it's practical, it's money, it's finance decision. No, it's an emotional decision, and we are not able to let it go. And there are several feelings that surround the property when we have purchased it with a hard-earned money. So let's see what are these syndromes that we call it. Number one is we always feel that I have made decent returns. Why should I sell? Like Soumya said, I always feel that I bought a property for 50 lakh. Today it is 2 crore rupees. I have made a clean profit of 1.50 crore. It's in absolute terms. I don't look whether this 1.50 crore has come in 5 years, 10 years, 15 years, or 20 years. I don't also see that what was the cost if I have taken this property on loan. What is the interest cost that is added to this cost of property? I don't even see the brokerage that I have paid, the registration fee that I have paid. All these costs add up, but I don't look at any of that. I just look 50 lakhs, 2 crores. I have made 4 times over. And that is how I feel that I should not therefore sell the property. And trust me, we've met so many people and all of them talk in these terms. The next point being that we always feel that the property price will appreciate. And we always feel this because there is always something or the other happening. So there is a IT hub coming in Bangalore or in Hyderabad. or in Bombay, there's a new airport coming up, or there's a new highway coming up. There are always excuses, or there are always reasons for us to feel that the property prices will go up. The other thing is that we put the property on rent, and like just Soumya explained, we look at the rental amount and we feel, chalo theek hai, itna paisa aa raha hai, it's good enough, and I don't need to, worry about it because this will manage a lot of my expenses. Many of us feel that, array, why sell? I have two kids. I'll give one property to one kid, second property to the second kid. It's a good thing. I'll will it off to them and then let them decide what they want to do with it. So I'm creating something for my children. The other thing is we always feel that what is the rush? Where do we have to run? We have enough and more. We have settled in our life. Our kids are settled in their life. There's no rush. I don't need to sell. When I get a good price or when it is another few years, I can easily wait. Many a times people have this thing in their head that, oh, if I sell the property, I have to pay taxes. None of us like to pay taxes. So why should we do that? Also, if I pay taxes, what do I do with the proceeds? That proceeds, I'll again have to buy a property because I want to save on the taxes. So I'll buy a property again. I'll be stuck in the same rut. So I might as well keep the property, let my children decide what they want to do with it. The other thing is many a times you've heard people give us a lot of emotional reasons for the property. Oh, this is my ancestral home. My grandmother gave it to me. Or, it's a really good area. I know I'm not going to live there again, or that house is too small for me, but it's a very good area. It's a good rent income that I get from there. Also, sometimes it's like it's the first house I ever bought. My kids grew up there. So many of these emotional reasons for which we hold on to the property. And last but not the least, is there any other reason, Soumya? Yes, another reason is that, we feel that, if selling is very easy, I'll just sell it off. No, it's a different story that when we try to go and sell it off, we have to first find the right buyer. We have to meet 20,000 people to find the right buyer. We need a good broker. We have to show our house to multiple people. The deal sometimes falls off. There's always a problem of how much in cash, how much in cash, how much in check, etc., etc. So it is a lot of effort and time, but we still feel that selling, even if I sell it, it's easy. I will not be able to buy it again, and that is one of the reasons that people don't want to sell any property that they might be holding on to. But now what we'll try and do is we'll try to break this down. Okay, we'll see what the reality is, because it's very important to see the numbers. All this what we talked about is what we feel, what we can't see the numbers in front of us. There is no like a mutual fund market. There's like a Sensex, there's a Nifty. There is no real estate market where you can every day log in and you can see, oh, the market went up today, the price of my property is down today. We don't get to do all of that, right? So the reality is to see the numbers, look at what is the value that is being created, and then take a call. So we have worked out this scenario for you. The scenario is that you have an additional property and you have given it on rent. You are living in a property in a residential area. You are very happy there. You have an additional property. You've given it on rent. Now the value of this property today is 2 crore rupees. You might have bought it at whatever amount. Today the value in the market is 2 crore rupees. The rent that you receive is around 60,000 per month, which is a fair rent. If I look at properties in Bombay, if I look at properties in Pune, if I look in Bangalore, Hyderabad, a property value which is of 2 crore is generating a rent of 60,000 rupees. So 60,000 into 12, the rent for the year is 7,20,000 rupees. Now, like Soumya said, what is the yield on your property? So you divide the 7,20,000 with 2 crore to find out what is the return you're generating on your property. And the return in this case comes to 4%. And on the right side, we are displaying generally in the areas which are very well known in Bangalore or in Pune or in Mumbai, we have generally taken a census and we have come to the conclusion that any of these are between 2 to 4% only. Pre-tax rental yield. You've still not done, a lot of costs are to come here. So let's see the calculation. This is the calculation you have to do for your property. Now, on all the rent that you received, you know you have to pay tax, but it does not hurt you at that point because all you see coming into your bank account is a rent of 60,000. You don't see the tax that you're paying because you don't pay the tax every month. You pay the tax at the end of the year when your CA is doing all the calculations on your total income and you pay off the rent. He tells you a figure and you pay off. You don't realize that, oh, I am paying this much only on the rent that I have received. In this case, the rent you receive 7,20,000, you're paying a tax of 30% on it. Most of us are in 30% tax bracket. So 2 lakh rupees gone in taxes. Now, the other cost that we don't think of, we pay the maintenance of that property. We pay the maintenance to the builder. We pay the property tax to the government. Typically, this is 1% of your property value. Whatever is your property value, it's 1% of it. So you are paying 2 lakh rupees on maintenance and property tax. So if you see the income that you were earning from your property from 7 lakh 20 falls 50% to 3 lakh rupees a year. This comes to an actual rental yield, the true rental yield of only 2%. Only 2%, guys. So we looked at all of those calculations, 3%, 4%, 5%. The property is going to grow at 6 and 7%. Well, the rental yield is only 2%. Now, this is one property that I'm talking about, which is worth 2 crore rupees. I want to talk to you about a friend of mine who actually bought a property worth 8 crores in a very, very BKC. The place is BKC, very close to where I live. They have bought a 3 BHK. 1 BKC, it's a very well-known project. So they have bought a 3 BHK at 8 crores there. You know the rent that she is getting over there? The rent is 3 lakh rupees. 3 lakh looks like a beautiful amount, right? You have a property with 3 lakhs, 50% of your retirement income probably is taken care of. So she is very happy. It's like rent for the year is 30 lakh rupees. I'm damn happy. Well, if you look at the yields, the yield that the rental yield that she's getting is a good yield. It's 5% almost compared to all the other properties that we have seen in India. But it's still low because the inflation in our economy itself is 6 to 7%. So honestly, you're not making much. Now you end up paying tax also on this. It comes to almost 10 lakh rupees. Maintenance and property tax, another 8 lakh rupees. So guys, the rent from 36 lakhs has come down again by 50% to 17 lakhs. Your yield on an 8 crore property still is 2%. So whether you take a 2 crore property, 1 crore property, you take a 3 crore property, 8 crore or a 15 crore property, most of your calculations will come approximately this much only.
Beautiful,
All right.
Chanda. Whether it is BKC or Bannerghatta Road, it is 2 to 4%.
It is the same. We have done this calculation for so many of our clients. So many of our clients. You know, we'll look at the second part of this. Okay. The second part of this is we've only looked at the rental income now. Let's also look at the appreciation we expect, right? We expect the property prices to appreciate besides getting rent. So let's look at the situation that you are decided that I have this beautiful property, I'm going to keep it. So what happens? You have the property value. Let's take the same example. You have 2 crore rupees of property. You are getting rent, but after we remove all the costs, your post tax and post cost rental income is 3 lakh rupees. All right. Now you're going to get rent. Swami, hold on. You're going to get rent for the next 10, 15 years. Assuming you're not selling the property, you're going to keep the property for next 10, 15 years. You'll gift it to your kids. So you're going to get rent for next 15 years. So 3 lakh into, so post-tax 3 lakh into 15 years, you're going to get 45 lakh rupees out of your property. But the rent also increases every year. By 5%, it increases. Every rental agreement you pick up, the rent increases by 5%. So in the next 15 years, Soumya, go ahead. You will get not only 45 lakh, you will actually make 65 lakhs out of your property in terms of rent. So this rent income you've received from the property. Now, what about property appreciation? As per the market trends in India and as per the National Housing Board Index, the property appreciation in India for this next decade is going to be close to 6 to 7% year on year. So we have worked at the highest, 7%. So let's say the property today is 2 crores. After 15 years, the value of that same property, you're going to get close to 5.5 crores. That's a good number, right? In our head, 5.5 crores on property, 65 lakhs on rent. So the total value that you have generated from your property comes close to 6 crore rupees. Soumya, if you go ahead, I would want to show them what is yes. So the total income that you earn from your property over the next 10, 15 years is going to be close to 6 crores. Bang, it's a good number to have, right? But we haven't taken into calculation yet. We've taken the maintenance cost and property tax into calculations, but we haven't taken the repairs into consideration. We haven't taken the major vacancy costs into consideration. We haven't taken renovation costs into consideration. So all that will add up and will actually realize that the value of the property might not be 6 crore 17, it might be much lower. Now, the other thing is that if this property is on loan, then you will have much lower value over here. If the property is on loan, right now the workings are that we are loan free. We have a property which is earning us money through rent, but it is also loan free. Okay, now this is if you continue keeping the property, bang, you make 6 crores for your buck. Okay, what happens if you decide to sell the property? We need to give you enough ammunition to understand whether you should keep the property or you should sell the property. So let's go ahead, Soumya. So let's say this property is 2 crore rupees. If you sell it today, you'll get 2 crore rupees. Now, the purchase cost we have assumed is about 80 lakh. Maybe you bought this property some 10 years back. You got a great deal. You bought it for 80 lakh rupees. Today, the value of the property is 2 crores. So what's your profit? What people say, I made a cool 1.20 crores, right? Now, what are we saying? You've made a profit of 1.20 crores. What do you do with it? You first have to pay tax on it. Now, there is tax with indexation calculations that is done. There is tax without indexation calculations done. For the purpose of simplicity, we are saying you're not even calculating indexation. You're saying I'll just pay the tax as it is and sell my property. So you pay the tax at 12.5%. That means you're paying a cool 15 lakh rupees as your tax. After paying 15 lakh rupees out of 1 crore 20, you are therefore left with 1 crore 85 lakhs. This 1 crore 85 lakhs which you receive today, right, has the chance to become a huge number, about 11 crores over the next 15 years. The power of compounding, if you invest this in the market and you earn a cool 13% return, which also, by the way, is the Nifty or the Sensex returns over the last decade or so. If you earn that much, that 1 crore 85 can become 11.5 crores. Soumya, just go ahead a little bit. Yes. Compare this to the 6.17 crores that your property will be worth if you hold on to the property. If you don't hold on to the property, you make almost 11.5 crores. So, of course, the monetary value is much more than keeping it in physical form. You're also free from all these property taxes, maintenance costs, getting a tenant, tenants hassles, repairs, vacancies, paperwork, accounting hassles. There are so many other things that trouble us, but we don't talk about it. So it's very clear. There's an option one, you hold on to the property. There's an option two, you sell the property. When you actually do the math, these numbers give you a perspective which might change the furniture in your head a little bit. All right. So I think just dwell on these numbers a little bit. What we are going to tell you now is you have seen the property trends that Soumya has shown you. You have seen the rental yields that we just calculated post-tax, post all the costs that are there. We've also seen the value of your property, even if you hold on to the property or you sell the property, right? So after looking at all these number crunching, after looking at all the data, if you're still deciding to hold on because of all the emotional reasons that we spoke about, what are you guys missing out on? Number one is that the value of the property is more in financial assets than in the physical assets. So you're better off selling it financially. Emotionally, I'm not talking about it. I'm saying financially, you're better off selling it because you're actually making your capital work for you. Otherwise, your capital is not working for you. Number two, it saves you a lot of time and effort because there are no hassles of taxes, tenant, repairs, vacancies, and endless paperwork. More importantly, don't you think your kids would be happier with 11 crores than 6 crores on paper, which they have to then think about selling and look after a buyer and look after the maintenance and all of that hassle? Yeah. So the next generation definitely wants more freedom in monetary terms than more keys. And last 2 points, last but not the least, transferring a physical asset is a little more difficult than transferring a financial asset. So once you liquidate your property and the money is invested, it is much easier to transfer it to the next generation than to transfer a house. And the house also grows older as the years pass. You have much more repairs to do. Maybe people may not want to buy, new areas come up. they are saddled with an old property then. And another last important thing is that if you need liquidity, you can sell a portion of your investments, but you can't sell a portion of your house, right? So in terms of liquidity, again, you're sitting on 11.5 crores of liquid money against 6.5 crores of money which is lying in your house, which is completely illiquid, right? So I think these
Fantastic,
points,
Chandra. Fantastic.
yes,
Yeah.
yes.
See,
So
no,
Soumya, I think
it's
Soumya,
very
I
much
think
there.
these points, I think these points will resonate with most people
Very
as
true.
they hear, because these are there which are always at the back of our mind. We feel it, but we don't talk or thrash it out like this because there is no rush.
Correct. No, absolutely. Very, very well said that. See, any investment or any action an Indian parent do, right? So they have the kids in their mind. If they really have them in their mind, then they should respect what is that they like it, right? And
Correct.
where you rightly told that that area today, which is prime, may no longer be prime tomorrow, right? So
Correct.
gone are the days that center of the city was prime. Now every place or every area is becoming a hub, right? It may not be relevant. It's very dynamic. Which is a prime area, which is a good area, is very, very dynamic. And these points, each and everything, I'm sure that it will resonate with them. And now we will just go back and talk about it with the case studies, right? So these are all our clients. Of course, the identity has been little bit changed, but the profile and the age and the way that we have helped them, everything is true. So they are also like you, me, and most of our attendees today who were in the myth, right? So the property will never go negative, the emotional. See, everything we will have to respect, right? So the emotional connect is, of course, emotional connect. So I just want to talk about one of my client scenario here and the life situation, right? And I will just going to, I'm just going to talk about that how his additional property was very emotionally connected with them, and then why they were holding on to it. And as a financial coach, right? So most of our clients who have worked with Happiness Factory and MFA Financial Coach knows that we connect with them periodically and do reviews. And it's just not about their investment numbers. We talk about their 360-degree of financial wellness, right? So when we continuously talk about it, question them, why do you hold this? Why are you doing this? How we can make them achieve that happy rich status as soon as possible. So that's the ultimate goal of every financial coach, right? Whether it's you or me. So when we are talking about it, we found out certain things about their additional property and how we have helped them and how it transformed their life, right? So this is about Mr. Shetty, who was 51. It just recently happened in the last 1 year, and he is a CXO. He was heading operations for the logistic. He is heading operations for logistic firm. He's in Sajapur Road. This is one of the prime upcoming area in Bangalore. Two kids, 18 and 21, they are going to their colleges. And he wants to retire in another 5 years because during the COVID that he has seen what it could be. And for especially the top management people, it's really difficult. It's stressful. So he decided that, okay, I'm just going to retire. I want to be ready in another 5 years to retire. So this is how his life situation is. Kids have completed, they're doing their education, but the corpus is being set aside separately because we've been doing goal-based investment for the family and we've been guiding him, right? Retirement corpus is in progress. We have another 4 more years to go to build it. Probably 3 to 4 years is what he has to build this corpus. Now, what about his property, right? So his another property or additional property, or this was the first property that he had bought. It's in Indiranagar. This is a favorite area for most of the Bangaloreans, right? It is center, or the vibe is so good, and it has the old Bangalore crowd. People keep on adding the reasons, like how you said for BKC. So there are certain areas in every city. It's close to everybody's heart. The resident's heart. So the current value of the property is 2.5 crores, right? So in 15 years, he has bought it 15 years before, and actual return that he has made is 6.7% CAGR. He bought it for 1995 lakhs, and as we all think that it is multiplied over the years, 90 to 2.5. See how much return that I have made. So this is what he has also been thinking. This is the property details and rental yield, that the way that you have calculated what is that he gets month on month, and divide that, multiplied it into 12 and divide that by the property value as on today, he is getting 3.10. So this is what the property that he's holding additionally. So when we spoke about the reason why are you holding it now, you're very, very comfortable living in Sajapur Road and it's a very, very spacious 3 BHK. He may not go back to Indiranagar, right? So when we were asking, these are all the reasons that he was mentioning. right? That is the area that where you will not be. There is always a quote, right? Every builder or the real estate advertisement hold that the lands are not anymore in making, right? So this is the quote that they use. So something like this, where will you buy a land or a flat in Indira Nagar going forward? So I will hold on to it. It's a very spacious 2 BHK. You will not get such a house in the future. This is the first home that me and my wife bought. Good rental income. Again, all he knows is a good rental income because he's getting about 65-70,000. According to him, it's a very good rental income because it takes care of 20-30% of his expenses, right? Closer to good schools, right? This was then when his kids were studying. And it was also closer to in-laws' place. And when they were in the young age, it must have been very useful. So very close by going and coming. So all these he's just keeping on and as a reason, though it is no more relevant. Value would go up. Indira Nagar will definitely grow much, much more because there is no place available to build anything more. I cannot buy anything. But even after all that, if I sell it, look at the return that I have made, there will be huge capital gains, right? And as you rightly said, there's no hurry, right? So this is just not a priority for anybody. It's there, rental income is coming, so let's continue. So these are all the reasons. So what is that we have done, right? So we as a financial coach, it is our duty to break it down as a number, right? Emotional part is something we will not be able to address, but some of it we'll be able to tell them, yes, we understand, we respect, but it's no more relevant. Kids are in college, there is in different area, and the prime area, the definitions also keep changing. So we broke that down, the numbers, 15 years, that so-called the great return that is being generated, that's what is there in the mind is 6.7%, single digit, right? And the inflation that you rightly, told that 6 to 7%, and it is just there, right? But in the inflation range. And future return, the area like that has a saturation point, but even we'll give a benefit of doubt. We just reduce forecast is just 5 to 6%. Good. So this is what that he can expect going forward. Rental yield is 3.1%. The so-called good rental yield, good rental that I'm getting is the actual yield is 3.1. While we calculated the actual capital gain tax, it was only 1.8 lakhs. How? The way that you have showed, people wouldn't have sat down and calculated this. There is an indexation benefit available even today, right? They can take the lower of any, either it's 12.5 or indexation benefit. So when he takes the indexation benefit, the actual tax implication on selling the property is just 1.8 lakh. So we showed them this calculation. We showed them that what actually you have made. When we review, they will look into it. And we also explain that your mutual fund has generated this much out of your FD. It is this much, PPF is this much. They never ask about their real estate, but we showed them that the additional property is generating only 6.7%. Now the in-laws place and school have no relevance. And we also told them that by selling it, what all he can achieve. Right? It took quite some time, probably 2-3 quarters. Then after he agreed, he went and put it for a sale. And then they, as you said, that they had to look for many buyers and there is a good broker. After all that, he kind of understood that, okay, let me sell it because these are all the points. And then slowly, he realized it and then he put it for a sale. And what all he has achieved after selling this is really great. Not many would have thought that he would have achieved this much, right? We are only talking about loss of rental income, loss of appreciation, and loss of the prime area property and all that. Look at what all he has achieved, what really mattered to him. Right. So he is a typical client of MFA and HF who has undergone the goal planning. He knows how much does he need, when is he going to retire, what is his retirement corpus, what makes him that happy rich. Because he knows that 1, 2, 3, 4, by selling this, he also was able to become debt free. Right. So his current property that is in Sajapur, that is a small outstanding of 45 lakhs. He cleared that, right? There was a gap. So every time we tell our client that, okay, to achieve this, what is the gap in how long you will take to achieve this, right? So for achieving his retirement corpus, there was a gap of 1.2 CR. He could put in that and that will grow and he was ready for the retirement. No maintenance hassle, no managing the tenants, no repair costs, no maintenance costs. That is a freedom from there. And he's ready for retirement. Peace of mind, no loan. Not only that, there is also an additional corpus left around 65 lakhs after paying tax, after the small expenses for the brokerage and all that. This 65 lakhs has the potential to grow to 6 crores in another 50 years. right? This is a pure wealth created for his legacy or for his children. As you rightly said, people love, our children love this 6 crores or 11 crores more than the keys, number of keys that they receive. Right. So this is how we helped Mr. Shetty and family to achieve many, many, many more good things or great things that is more important for his financial life than whatever that he's by selling the additional property, right? There's one more case study. People might ask, okay, he is in the accumulation phase, but no, what about retirees? For retirees, it's a great source of income. Rental income is the great source of income. We don't have to, even if they don't have pension, they have 1, 2, 3 house, 3 lakhs of income coming in, and then they are sorted, right? I'm going to talk about that also. Somebody who has completed all their goals, who is in the retirement phase, how we have helped them, and then how we help them take the right decision at the right time. Before that, I would like to launch a poll requesting the attendees to participate in the poll. Can I please have the poll too, please? Thank you. Requesting you all to participate in the poll, and we'll close the poll in another 5 to 10 seconds. Thank you. It's nice to see many of you have mentioned that you have a clarity on your goals and your numbers, and some of you have mentioned that you need help, and that's really nice to see. We will move ahead with the second case study. That is the second scenario of another family, Mr. Swami. He's retired. He is in his distribution stage, right? So somebody who's earning and then investing, we call them that they are in accumulation phase, and he and his family is in distribution phase where they have been spending the money or whatever that they have invested, or investing or continuing to invest to build a legacy for their kids, right? So that is the profile. And his children are not in India, they settled in UK, and he has pension, so he doesn't have to worry about his cash flow through rental or whatever. Right now he is building wealth for the next generation. So that is how he is. He's very comfortable. He is living in Pune because that is where they are very comfortable. They got kind of settled, right? So he also owns the Pune house is his own, and he has an inherited house in Kochi, right? And the current market value of the property is 3 crore. This is an independent house, right? And there is no rental income coming in from there. There are different reasons. He tried renting it out, but then it's a very big house, so it's not very easy to rent it out, and not getting the continuous tenant. So he thought, okay, I'll just manage it myself, having a servant and the gardener there, and he was just maintaining it. Once in 3 months he would go there, because there are a lot of there might be a legal issue, somebody might come and occupy. To avoid all that, he'll just go once in a quarter or once in 2 quarters and see that, right? And the reason for holding on to that property, right, at this age 67, he goes and visits, is he believes that city has a high potential, right? So this is also another talk that I hear commonly from my clients, that okay, now the bigger cities are gone, now next is the tier 2 cities, right? So they have a higher potential to grow. So the same way he was also waiting that Cochin has a great potential to grow. It will grow. I will sell it when it comes to 4 crores, right? Because like Chadda said, that something or the other development keep coming in, right? Whether it is relevant to us or not, we will wait for metro to come, railway station to come, airport to come, And we miss out that what if we sell now, that how much we are going to grow it, right? So all that we may not think, because everybody is saying there is a development happening in that area. I'll wait for it. I will only sell when the price is 4 CR. And being a senior citizen, this has a concern that there will be a huge tax outgo because it's an inherited property and the property has grown multifold, right? And no urgency to sell. I have time, right? So I will do it aramse. So this is what he has been thinking, and that is the reason why he was holding on. He was ready to sell, but then there are some reason. Okay, right now I'll not do it. Let it become 4 crore. And how we have helped, right? So we just showed them the data that how different city real estate market has been appreciating and how what would be the scenario in Cochin likely, right? And there is an option to reduce his capital gain tax outgo by he doesn't have to invest again in a property. He can also buy a bond, right? So there are a segment of bond called 54 EC bonds where you can invest in that instead of paying the tax or instead of going and buying another property to save the tax. That we showed him that by doing that, how his tax implication can be reduced. Even after paying the tax. Okay, another scenario, if you pay the tax and invest in the bonds, then after that also, if you just invest the remaining money in 10 years, what would be the corpus that you can make and give it to your kids? Anyway, there is no rental yield, and there is no chance of he and his wife going and living in Cochin. They're very comfortable in Pune, right? So Chanda, also I mentioned one point that the financial assets are easier to transmit or pass on to the kids than the real estate asset. So we have mentioned this. We've also mentioned some case studies or some of the stories that we had faced or our clients have faced because there were many properties and the client is no more than how much struggle the kids have to undergo to sell that or maintain that. So all this we have shared, and kind of he agreed that, okay, fine, let me put it for a sale and then let's see what it happens, that I will not wait for 4 CR, I'll put it for a sale. What he achieved, he sold the property for 3 crores. He invested 50 lakhs in the capital gain bonds, and he was afraid of a huge tax, but he paid only 7 lakh of tax. After all that, he put the remaining money in a diversified equity portfolio with our guidance, and it has the potential to grow to 8 crore corpus in the next 10 years. Since he is 67, we have not projected him 15, 20 years and all that. In next 10 years, what is that he can make, right? So kids are relieved. He also doesn't have tension of going and visiting the property frequently. What will happen after them, how the property can be managed, all that is being relieved. He has a complete peace of mind now. The transmission, he made it really easy, right? So this is how we have helped our clients at different life stage by giving the right numbers, right projection, and it helped them to take the right decision that also made their financial life beautiful, and their tension has been reduced to a very, very good extent, right? So these are two different case studies that we have come across. We have helped many client families, and Chanda would have came across many families, and other FCs also came across many families. We have guided them. So there are many number of families that we have helped to take a right decision. So what is that learning, right? So we would like to just summarize all the learnings that we have seen from the last 20 minutes, 30 minutes, and also the real life situations that we have handled of our clients, families, etc. So Chanda would nicely summarize that the learnings of this session and our experiences.
I'll do that. Now, one thing I want to make clear is that the motto of this session is to bring the math in front of you. The motto of this session is to show you or have some changes in your way of thinking to make you at least push you towards the road where you may think of, oh, am I making the right decision by keeping this property? Maybe you're right, hold on to it. Maybe you're not that right, and then definitely look at what can you do to monetize it and use your money more effectively, more efficiently to be transferred to the next generation. So in no way we are going to say something is right, something is wrong, something is good, something is bad, but just the facts. All right. So I think
Yeah.
one of the
Just to
lessons
add
that
on to this, Chanda, I also wanted to mention, you will also agree with that. There are many client families who wanted to buy their end use property, right? So we want to move there. This is our first house. This is a small house. We are moving to 4 BHK. Our family has become bigger. Or when doctors say that I want to build this, we've also helped them with the math to buy it. And we have told them, go
correct.
ahead and do it. right? So
Correct.
just to support the point that you have mentioned, that we are not against any asset. We have told many families, okay, this calculation is correct. You are well off. Your cash flow is good. Go for a loan. This money percentage of loan and this much you put it in your hand. Go for it and buy.
Correct.
Right?
Absolutely. So therefore, it's very important to understand lesson number one is that the real estate market goes through. Soumya, go ahead. Yeah, the property market, the real estate market, like any other asset class, be it equity, be it debt, be it gold, be it overseas market, all of them are volatile, right? Properties don't always go, the prices don't always go up. Like Soumya shared the data, which is very clearly, it comes from all reliable sources, as you would have seen on the slides. The data clearly shows that the property prices have not really appreciated as much. So they don't always go up. So many cases are there where the property has been stagnant for years. Number two, the golden era of property returns is behind us. Future is only showing that we, as a developing economy, going on to become a Viksit Bharat, the property as an asset class which was safe, secure, would give the maximum returns is gone. Maybe it was true 20 years back. It's no longer true. Same thing with fixed deposits. No longer true that fixed deposit is the safest place to keep your money or the easiest or the best way to keep your money. Future returns are going to be lower. Again, liquidity is a big challenge, whether we accept it or not. When it comes to selling a property, we face challenges. Selling isn't that quick or easy. Getting the right price, getting the right person to sell it to, getting the right way of accepting the money, how much people are agreeable to give you the money straight away, whether they're going to take a loan, what are the process going to be, all of that. Next, it comes with its own legal, operational, and maintenance hassles. We all know about that. There are vacancies. There's something or the other goes wrong. The house we live in only itself, we knows how many hassles are there. So the house which you don't live in and someone else is living into that house, so many other hassles come up. Again, many a times, like Soumya said, you attach property to a goal, to a kid's marriage, to a kid's education, to leave something behind for the kids. It's especially for these short-term kind of goals. It is absolutely not suitable. You are better off having a financial asset rather than a physical asset. Very difficult sometimes for people to pass on the property as a legacy. It is much more difficult than a financial asset. You have a lot of paperwork, a lot of legal hassles that you may have to face. Also worth noting is that the cash transactions are reducing, at least in the main cities. The cash transactions are reducing. We have so many clients who are waiting for their property to be sold, but they are not getting the enough amount that they need in check. Now we are entering a digital and a transparent economy. This is going to change more and more. Recently, only a registration bill has come up in 2025, which is going to make this more transparent, more efficient, more online registrations, e-Aadhaar, authentication, and everything is going to come online. So we are moving towards that kind of an economy. Also, the another thing is that we are also becoming location agnostic, because first we used to say that, this location is Navi Mumbai is, the emerging. But that Navi Mumbai, there have become so many Navi Mumbais, there have become so many new Bangalores and so many new Punas and so many new Hyderabad, right? So the location advantage isn't going to last forever. It is changing like that nowadays. So hotspots are changing. So what do we take away from this, right? What do we take away from this? Next slide, Soumya. What we will take away from this is number one, property buying makes sense. Having a property makes sense, not buying. Keeping a property also makes sense, but only if you are using it personally. Either you are living in it or you are frequently using it. Like Soumya said, that person was going to Cochin once in a quarter, but he was going not to live. He was going only to make sure that the property is in a decent shape, because no one should come and live in that property and he should not have legal hassles. But there are many people who have properties where they go and live once in a week, once in a month or on weekends, etc. If you are going to frequently use it, by all means, it gives you that kind of pleasure, keep the property. Number two, very, very important takeaway is that out of all the assets that you've made up, your residential property, your invested property, your gold, your mutual funds, your shares, your fixed deposits, your cash, whatever it is, what all the assets that you have done or you have added up for yourself, your property should not be more than 50% of the asset value. To give you an example, if you have assets worth 10 crores, then the property that you live in plus the properties that you've invested in should not be more than 5 crores. If your total assets are 5 crores, then it should not exceed more than 2.5 crores. This is including the property that you live in. Ideally, that is the allocation. Most people have it to 70% and 80%, which is really, really not good for you. You have to start monetizing and seeing the real value of your assets. And more importantly, the takeaway is if you talk to any next generation, okay, any next generation individual, they will prefer simplicity. They don't even know where they are going to be. We have parents who keep the property saying that this property, my son is in the US, but if he comes back, maybe he will come and settle here, so I will keep this property for him. That property is going to grow old and you don't know what your son wants to do after 10 years in life, right? So they don't want multiple properties, they don't want properties to be kept for them. They are shifting to financial assets because they are driven by better literacy and smarter math. So keep that in mind, keep the calculations in mind, and keep these takeaways in mind for sure.
Yeah, thanks a lot for that, Chanda. And quickly, we will just introduce, since most of our clients know us, we just kept it in the last, right? So we represent MFA Capital and Happiness Factory. MFA Capital, you all know that it's a niche goal-based investment management firm, and we personalize your investment strategies which are aligned to your goals, right? So to support this philosophy, we also have Happiness Factory, which is a fintech firm, and we have a beautiful platform that supports the philosophy, and we create happy rich families every day by the financial coaches, right? And we also have our firm in the US, which has been doing the same thing for Indian origin families. We simplify cross-border finance and the compliances. So this is what we are, and what is the role of, I mean, what is that we have done, right? So we've been in the market for last 20 years, and we've crossed 8,500 crores. That is $1 billion. And we are present in almost 40 countries. We have our clients in more than 40 plus countries, and 100 plus professionals are every day working for your goal to be accomplished. And we also have a very, very unique approach towards, managing the wealth, the practice wise, right? So we believe in the your managing your mindset. That mindset is the result of the professional you are, the person you are, right? So we have a different segment, and the experts working on the segments, which are business owners, and we have chartered accountants as our clients and doctors practice. We also work very closely with the retirees because they have a different need and the objectives when as far as their investments are concerned. Corporate executives, celebrities, NRIs, and we also one of the very few firms who's working on the special need families, financial planning and investment management, right? So as an FC, this is our philosophy. Most of you would be knowing it. We focus on your purpose, then create a plan for you and devise a process, and finally the product comes in picture, right? So otherwise in the market, if you see, it is reverse, right? So this has been very, very sustainable, and the last 20 years it has helped thousands of our clients' families to achieve their goals peacefully and happily. And not only that, because we are following this, it's not only going towards the investments and the numbers and the products. We are able to touch base on all the important decisions that they have to take, and take it rightly when it comes to their finances, and that shape up their life beautifully, and they are living very peacefully. Right. As a financial coach here, we work like your financial coach, like how you have your health coach and you have your life coach. So we are a financial coach, not a relationship manager or investment advisor. We act like your personal CFO, right? So chief financial officer. We also do, of course, take care of your investment, and we act like your project manager. We take care of your risk, right? So we very, very proudly say, Chanda keeps saying that we take care of our money the way we do our family members, our brothers and sisters and friends, right? So it's not different for us, right? Our clients and our family members, we look at them in the same way, and they manage their money in the similar manner. right? So, and we also link between the professionals. See, when it comes to your money, it's just not standalone investments, right? It has to be correctly managed, and the tax has to be handled, and also the legacy planning has to be properly put in place. So we work with the lawyers and the chartered accountants of the clients very closely, so that we just close the loop and the circle is complete, right? So this is what a financial coach in MFA and Happiness Factory has been doing for our clients. Now, this is the time you can please shoot your questions in your Q&A box, or you can unmute and ask your questions. Meanwhile, I'm just requesting the final poll. This is about the feedback and what is that you want us to cover in the coming sessions. So we are also planning to do series of the real estate session. This is one part that I have an additional property. Should I buy or should I hold? And there is also another thing that should I, no, this is fine, but there are people talking about commercial property. There are different questions that you may have on the real estate. We can cover one by one. You please put in your suggestion also. What is the kind of session you want us to do? Please also participate in the poll, and you can shoot your questions, and we would love to answer.
I think, Soumya, the numbers were so many. I think it's very important that the people who attended and have learned about this have a one-on-one session, and when we can do the calculations for them.
Absolutely. Yeah. So the objective of the session is not, I mean, mainly to put it in their mind that, okay,
Correct.
change the stereotype, just give it a try, put your personalized numbers and see how does it look like.
How it works. Yeah,
Right. So,
correct. You may be pleasantly surprised.
yeah. So we would be ending the poll. Please participate in the poll. And if there are any questions, we can read it out and we can address it. There's no Q&A box I could see. Thank you so much for participating in the polls, and you were a great audience. And we would like to address if you have any queries on the said topic.
Yeah. Can either raise a hand and put it in the Q&A. I think, Soumya, there was one question which I've answered. It
Okay.
was whether the growth is in terms of asset value. So the real estate growth that you had shown the charts for was in terms of sales growth, as well as the income growth chart that you showed was in terms of the asset value.
Okay, so I think we have shown both, right? So one is the
Yeah.
growth, the initial one was growth as such in the industry and the market, and another one was the asset value growth. Both we have shown one by one. Both were in the single digit. The previous one was ranging between 3 to 7, and the median was around 5.3, and the growth was also in the single digit around 4 to 5.
4 to 5%. Yes.
Yeah.
Somewhere there's another one in Q&A.
Ah.
So would it be prudent to put all investments in mutual funds rather than distributing it in different assets? Absolutely not. So like we said, as a financial coach, our job is to do the correct kind of asset allocation for you, which is going to be the biggest and the most important decision that you take in terms of your money, and figure out where you need to have the right distribution of assets, because it's like a balanced diet, right? You need enough vitamins, you need enough carbohydrates, you need enough protein, etc. Anything over is not good, anything under is not good. Similarly, we will never tell, like we said, an asset allocation that you have to remember to take away from this session is that a real estate should not exceed more than 50% of your total assets. So if your real asset is about 40%, 50%, 35%, great, you have to keep, you need to keep it, you please keep it. The other amounts also, the other assets that you have created can be distributed between your gold, it can be distributed between your mutual funds, stocks, etc. So nowhere I think it is recommended or it is advisable that you put everything in one place. It's not prudent.
Right, Chanda, there are no more questions. Should we?
Yeah.
Uh,
Yeah.
Thank you
Thank
so
you
much
guys.
for coming.
Yes.
We just hope that we did our best to meet the objective of the session. And, the result lies in if you could take your time and then connect with your financial coach just to understand the numbers and understand what all you can achieve by selling your additional property. If you have already done your goal-based planning, you will be able to easily visualize this. I mean, you can just try doing this exercise rather than going by the same myths that everybody is talking about. So, and we would love to see you in the next session that's pertaining to real estate or any other topic of your interest. Thank you so much. And
Soumya just showed the contact details, so they will have our contact details to get in touch with us.
sorry, Chanda. Yeah.
So thank you so much from my side too. And we will be coming up with other sessions on real estate. We would have loved for you to, in the comments, tell us what particular topic in real estate you would like us to address. But you will soon get more invitations from us to attend the webinar on something else on real estate. Thank you so much.
Wishing you all a great weekend. Thank you so much. Bye bye. Good night.
Bye.